Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Tuesday morning pre-market webcast. Okay, daily chart of the E-mini, and yesterday was, well, it was excruciating. It was excruciatingly boring. There really wasn't a whole heck of a lot that happened yesterday. The one thing that we did kind of figure out yesterday, at least potentially, is that 2012 to 2013, 2014 is going to be difficult for the market to get through, at least in the short term. On the cash chart, that translates to the, um, right around the 200-day moving average. Um, we've backed off some in the overnight. My focus is on the area of the weekly pivot, which is down in 1994. That also corresponds with the 200-day exponential moving average on the um, mini, which is at 94.5. So, I mean, there's a lot going on. You've got 94.5 is weekly pivot and the 200 EMA. So if we continue to push lower this morning, and we're so close now, we've traded in the 96s that touching it either in the pre-market or shortly after the open seems pretty reasonable to me. The reaction to that is going to define at least the first part of the day. What this week is going to remain about is tomorrow at 2 o'clock, the Fed. Whether they take it down and turn that into a potential dip buy, whether they walk it up, I don't know. The only thing I want to do is to be able to identify the key areas and be able to trade accordingly. So right now we're short. We got short around the close yesterday, put 1175, and we've taken some profits on that, and we've got a decent uh, runner locked in with a stop. So however it turns out, we're going to be okay. If we break below, then I want to take some more profits down in the area of the weekly pivot. If weekly pivot converts to resistance, then you can go ahead and start to push a little bit towards the lows of last week down at 67.25. Do the bears seem like they've got that kind of a move in them? I'm not feeling it, but at the same time, we're up a bit, but getting short just because we've been up for a while is the worst reason imaginable to get short. There's a bid underneath this market, and I think there's going to remain a bid under this market until tomorrow when we figure out what the Fed wants to do or what they don't want to do, and what the outlook is and what we get from the press conference. So we remain kind of in a holding pattern. That's what yesterday was. It was like an 11 handle holding pattern all day long. So if they shelf it again, I would expect to see 94 be support, 2012 to 2013 be resistance, and we trade, inside that range. All right, everybody have a good one. Follow us on Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come check out the chat room. Come trade this stuff with us. We'd love to meet you. A lot of people starting. We've got a lot of new members, a lot of new paid members, a lot of trial members. It's a really good time to start. It's a great, everybody can kind of learn together. And, if you trade this stuff all the time, don't trade it by yourself. I'll be back tomorrow morning with another webcast. Trade them well.